Hello, you're watching us here on Midcap Radar. I'm Mangalam Malu, and it's a 100-point gain that we're seeing on the index. It's holding steady around that 15,650 mark. On the way up, it is being supported by the Nifty Bank, and on the way down, it's being pressured by the IT index, and that basically is the tug-of-war of the frontline indices. No such problem for the mid-cap index, which is outperforming with a good 4:1 advanced decline ratio. And that is something that will keep the street abuzz. And right now, as we speak, apart from the F&O stocks, we do have a lot of cash stocks which are buzzing as well. And one of them, which is actually currently closer to the high point of today's trading session, is Somany Ceramics. Somany Ceramics, remember, is a stock which has been buzzing today on the back of a new announcement that the company has made with regards to a launch of a line, the extraordinary line that the company calls it, in terms of premium offerings for flooring. But in this year itself, we've seen a bit of a correction in the stock price. The entire space has been pressured by high input prices. So to discuss the prospects of this business and the view going ahead for this year, we have Abhishek Somany joining in now. Abhishek, thank you so much. Always a pleasure speaking with you. First up, if you could tell us a little about the launch of Extraordinary, right? I mean, what are the price points you're looking to sell it at? How does that compare to your average realization? And what's the kind of revenue that you anticipate from this over the next couple of years?
Yeah, so this is one of the three launches which we are doing. As you know, we've expanded capacity in our north plant, west plant, and the south plant, 4 million square meters each in each of the plants. So this particular launch was more to do with the north plant. A couple of weeks ago, we had a smaller launch for the western plant. So let's talk about this one. We've launched an entirely new range of our wall tiles, which is in the size of 30 by 60, which is 1 feet by 2 feet, and also 30 by 45, which is 1 feet by 1.5 feet. Those are the most popular wall tile segments today. So we've launched a completely new line, a lot of more value-added products with high gloss. We have a range called Glosstra, which is probably the glossiest tile available in India. We've expanded capacity on that one. And along with that, we also launched our floor tough, which is Marvella tiles, porcelain tiles, which we have in 2 feet by 4 feet and 2 feet by 2 feet. These come in polished and in matte. And we also launched some wooden planks, which are replicating the ones which you have in the normal wood or engineered wood planks. So this was a launch which we did yesterday. We hope to this expanded capacity will give us significant revenue. Next month, we have the launch for the south plant. So very excited. The plants are running now full, and hopefully this launch has been accepted very well with our dealers.
Right. That's exactly the next point, because as interest rates rise, the demand for housing is expected to take a bit of a hit, if you must. And what exactly is your breakup in terms of sales between replacement and new home demand? And could this rising interest rate scenario, rising inflation scenario impact performance?
I think the building industry has come out of the very low cycle. Last 10 years, they've been on a low cycle. So I think there's no stopping the building industry today. Of course, there may be aberrations of this nature where the interest rates have gone up, but I don't think that much. That is more of a concern. The concern is the input cost rising of steel, cement, and even in our segment, we've seen at the backdrop of the war, major cost for us is fuel and energy, and gas has gone up unprecedentedly, and obviously a lot of that have not been able to be passed on into the market. So that is creating pressures on our margins, but we are not really seeing a huge aberration on volumes. Yes, summer months are generally slow, so we have seen, like in a normal summer month, we have seen a little bit of a slowdown, but that was expected. I haven't seen a major slowdown in terms of volume. But you're right, they will have a little bit of an impact on the housing. Your second question was replacement market versus new. I don't have exact BI. I think nobody in the industry has that BI, but we are approximately between 15 to 20% replacement market, which is a lot higher than what it was earlier. This is at the backdrop of COVID, where a lot of people have renovated their homes, have built new spaces within the homes. So replacement market continues to grow for us, and this would, I think, only keep going up. Tiles are no longer a hygiene item, it's a fashion item. So that's good news for us. And new homes will keep getting built. So I think the housing industry finally has corrected it for the positive.
Right. So long as it remains a fashion item, your margins would be protected. But I take your point on power and fuel costs rising for you. In the fourth quarter itself, we saw an uptick of almost 30% year on year in terms of your power and fuel costs, which accounts for what, about 25 to 28% of your overall sales. And you had taken a 15% price hike. Since the fourth quarter to now as we speak, has there been a further price hike that you've announced? Has there been any moderation or any let up in input costs?
Yes, so the input costs in the last 4 months, we've seen it going up every 15 days. So we did raise prices a very small amount in April, and we are the only manufacturer which has done another price increase, a very small amount in June itself. So approximately 2.5% has been the price increase. But then we've seen in the last 15 days, again, the energy prices have gone up. So just give you a perspective, gas which we were buying, ballpark amongst the three locations which we have, north, south and west, we were ballpark buying it at about 32, 33 rupees exactly 15 months from today. The same gas which we are buying now, ballpark is approximately at a 68 to 70 rupee level. So, and this keeps going up every 2-3 rupees on a 15-day basis. So it's very difficult to keep correcting prices every 15 days. It only confuses the market further. So we've tried our best to pass on whatever we can. I don't know why the larger concentration in Morbi is holding back to raise prices, where every single building material item has gone up. Tiles is the only thing which seems to have not been able to pass on as much as we could have very easily if Morbi was on the right footing.
You know, talking about Morbi itself, we did speak to a couple of players from Morbi earlier, and they said that they've planned to shift to propane, which is relatively low cost raw material for them in terms of fuel. Can't you guys do that?
No, we can't, and it's counterproductive because this is more of a game which they're playing for the short term. Now again, it's very relative. Like I said, we were buying gas at 32 rupees, and we're buying natural gas at about 68 to 70 rupees. Propane is about $5 cheaper right now. So it always follows that if propane is 5-7 rupees cheaper, you will have gas correcting over the next 3-4 months. So this is, I don't know how they function on a short-term basis, but our plants, we would prefer using gas through our pipelines rather than do this short-term corrections.
Are we likely
and anyway,
to see,
it needs investment, and it also needs a lot of land to put a propane tank.
Are we likely to see further margin deterioration in the first quarter from what it was in the fourth quarter?
So first quarter, I don't think it would be a right comparison because first quarter is always a muted quarter. When we had good times also, first quarter is a muted quarter. And the last, between 2015 to 19, we had 4 times, and that also was
right.
relatively...
So let's talk about the entire year then. Yeah.
All year we will see a major decline.
You won't see a major decline.
Hopefully not. I don't think we should be talking about margins because I have no BI on where the fuel.
All right. So tell us about revenues. What are you penciling in? 20% is what you had guided for earlier. Is that likely to take place in this year as well?
Absolutely. We should be able to do the volume, and that is the right way to look at this industry today. Let's not talk about margins at all because I have absolutely zero outlook on that. But outlook which we have on volume, we will put in all the 12 million which we have commissioned.
Let's hope that happens. And finally, do we hear about a new CFO as well? Because Sekat has resigned, in May. It's been 24-25 days. Have you announced anyone?
We're in the lookout. We should have somebody in place very soon.
Will it be internal? Will it be someone from outside?
Somebody from outside.
All right. What was the reason why he left? Is there anything in particular? Because usually
mutual.
Sorry?
Mutual. Very mutual.
All right. Take that point. Abhishek, thank you so much for joining in. 20% volume growth is what he guides for. Premium tiles is something that he's launched. Let's see whether it is accepted well in the market in such inflationary environment or not. But replacement demand is increasing as an overall sales mix in terms of home improvement, and that's telling on the stock price. At least in today's trading session, it's up around 5.5%, notwithstanding the correction that we've seen in the recent past. Take a short break, come back. We talk about the auto space. Anuj Sethi, who's the Senior Director at CRISIL, joins in.